It is one of the most anticipated RBA rate calls in a while. After years of tough going for borrowers, might they be about to get some help? We'll find out this afternoon, but there are two sides of this ledger that the board must consider that makes this far from a simple decision. Joining us live now, the Chief Investment Officer at the Motley, Scott Phillips. It's good to see you as always, Scott. So on the one side, inflation's trending downwards, spending way down, insolvencies are up. So that's one side and part of it. Two, underlying inflation is not under control. It's not within the target range anyway. And the US is now paying the price of going too early. So which side wins?
That's the key question. Throw, by the way, on top of that, the fact that unemployment is down, which is great for anyone wanting a job. But the RBA remains concerned about wage inflation. So that's the other bit on that side of the ledger, mate. But otherwise, you absolutely nailed the setup. The RBA has to do a very difficult dance here because they know well, it's accepted economic orthodoxy, that rate movements up and down take about 6 to 9 months to take full effect. So they're not even trying to work out where we are now. They're trying to guess and say, where will we be in 6 months' time? Will we have wished by then we'd kept rates on hold or cut rates way back in February? So that's what they're trying to organise. You're right about the US, mate, and we've talked about before. The US a few months ago had said we'll do 4 rate cuts in 2025. By the way, hadn't learned from Phil making promises and predictions. So then a month or so ago, they said, actually, it was going to be 4. Well, now it's only going to be 2. And then most recently, they took out the phrase progress on inflation from their communications. In other words, they don't think they are making progress on inflation, and that number actually bumped up last month. Now, maybe it's a rogue number, maybe it comes back down, but you're right, that is absolutely the risk, and the RBA knows this, of going too early. I've said many times, mate, that the real tragedy would be going now and then put rates back up in 6, 9 or 12 months because they realise they have gone too early. It's about damaging confidence, damaging the economy, borrowers, the whole box and dice. It's a really, really, really difficult one. The other one too, by the way, the RBA is not political. I don't have any truck with anyone who thinks the RBA is doing things for the Liberal Party, the Labor Party or whatever. But they also will be very, very aware of an election campaign, which is almost certain to kick off in a matter of weeks, if not sooner. And so they've got to try and work out, do they go before the campaign? Do they risk going during the campaign? I hope they do if that's what's needed, not because of the political ramifications, but specifically ignoring them. In other words, we are independent. We don't care there's an election on. We're doing what's right for the economy. But there's a lot of pressure they'll put on themselves to say, we don't want to seem politicised, and that's important too.
So given everything that you've said there, and I mean, there are reasonable arguments on both sides, why is the markets at 90% then? Is that just too favourable? Shouldn't that be down somewhere at 60 or 70?
Yes, 1,000,000%, mate. Whether or not they cut today, there is zero. I mean, you show the numbers before, the RBA rate tracker at 90-10. The bond market saying 96% chance of a rate cut. Nothing is that certain in life, right? Just not. The RBA has given us no reason to believe. They haven't said, oh, look, we'll cut when this happens. The market, and this is the other thing, by the way, the odds have increased dramatically over the past 4 weeks, even though there's been no new data. And it's that self-reinforcing loop of I think it, so you think it, so I think it, so you're more confident. It's a self-reinforcing feedback loop amongst all of the bond market traders and economists. Again, it might still happen. I'm not saying it therefore won't happen, but you're right. Probabilities are not certainties. And yeah, they're absolutely wrong to be that confident. I will say economists are somewhere between 2/3 and 3/4 saying a rate cut, the other quarter or third saying probably a hold. That is a far more reasonable approach, I think. The big one is the quarterly inflation number, mate. It was 0.5%. If you annualize that, and you shouldn't just multiply it by 4, but if you did, you'd get to 2%, and that's the bottom end of the range. If the RBA does cut today, it'll be that data point, almost in isolation, that gives them enough confidence to do so.
That's a good point. All right, Scott, appreciate your time as always. Thank you. We'll chat again soon.